Okay, check, 1, 2. Welcome back to the Broke Investor. If you're listening or if you're watching this channel, it's because you're broke and you want to become an investor. I am Crypto Antonio. I love silver, and welcome to the show. This is episode 7. Woo, 7! Awesome! I can't believe I've done this for 7 episodes. The seventh time I've been a top talking head on YouTube. So, into the officials. Nothing you see and hear here is financial advice, but purely for entertainment and educational purposes only. And please like and subscribe to the video so you can be notified of new content that comes out, and to help the algorithm to get anyone else who needs to see it, who needs to see this, able to. Anyway, so today on the Broke Investor, we're going to talk about trading versus investing. Yeah, because I guess, once you kind of get into this idea of you want to take some money aside, put it away, not just save it, but you want it to go into something that's going to make it grow, maybe a little bit better than your average savings account with a bank. The idea of investing kind of quickly turns into the idea of trading. And those are two very, very different concepts. Although they can be quite similar, they can be radically different. So there's different types of investing, right? There's long-term, short-term, medium-term, passive, aggressive, all sorts of risk tolerance. The same applies for trading. So with trading, I guess you could say it's a little bit of a quicker turnaround. So trading, you have like your day trades where you're doing multiple trades in a day. Investing is more like you put money into something. Let's say your silver or your Bitcoin. You wait 2, 3, 5, 10 years, and then you might if it has grown, then you'll want to take capital out, or it's typically a longer ride on the investment side. So trading, there's a range, right? There's intraday trade. There's day trading where you're doing multiple trades within a 24-hour period. Intraday trading where you're trading maybe over a day or two. That can also be swing trading. Swing trading might be something that you do over a couple days to a week, maybe even a little bit longer, maybe even a month. And then there's longer type trading. Some people trade maybe once or twice a year, every 6 months or every season. So that's kind of the scope. I will tell you right away that trading is a lot riskier. Because with the investment, the reason it's riskier is because you're expecting a return in a shorter amount of time. And with investing, you typically put your money aside and you have a plan, let's say 5 years, 2 to 5, 2 to 10, 20 years. That's kind of the investment route. You just kind of keep adding, capital into your asset or your portfolio, and then you don't really worry about it because your plan is to just keep accumulating. Whereas with trading, you typically have your capital put into something, and then you might wait a shorter amount of time to see what the returns are. You may add along the way. You may take profit along the way, depending on what the scenario is. But generally, there's a little bit more risk involved with trading. Trading, especially in metals and crypto, more so crypto, highly risky. Highly risky. And if you're leverage trading, exponential risk. Not to say that there aren't successful leverage traders, but leverage does add a great amount of risk to your exposure. So with the passive investment route, we talked earlier about putting away into your retirement plan through your employer, or buying stocks and shares for a company you work for, or through a portfolio of companies through your employer. That's passive. Comes off your paycheck, goes into the portfolio. You don't really look at it, monitor it, manage it at all. It just gets there, doing its thing. There's a fund manager who kind of takes care of that for you, and it's really hands off. Whereas with trading, depending on what kind of trading you're doing, you can trade over the counter with an institution, or you can trade with a broker as well. They'll typically charge you a fee for that, of course, and depending on the type of risk you're wanting to take, they may allow you to take that type of risk. They may not. It depends because as a custodian or a broker, you're going to want to limit the exposure of your assets that your customers want to be exposed to. Does that make sense? So if you're running a brokerage house or something, or a brokerage firm, and your customer wants to take ridiculous risk, it might not be in the best interest of your operation or the customer's portfolio. If you're trading as an individual, that is probably where the most control and discipline is required, because as a trader, you're managing the money yourself. You put the money onto the exchange or into the market, and you literally have to watch it and be very confident and diligent about what's going to happen, when you're going to take profit, when you're going to get out. So there's a lot more knowledge and a lot more understanding and much more self-discipline required in trading. And it's not to say it's not a bad idea to learn about trading, but I would definitely not recommend trading for any beginners. I would recommend, your again, nothing you see here is financial advice. If you're just getting into this investing type of thing, then go with low risk, low volatility. Kind of ironic to say when I've been championing Bitcoin for a while, but for me, I think it's the crypto. It's the crypto. The ETFs are coming out. It's becoming more established on the global scale. Blah blah blah. Trading as an individual, a lot of different things can happen. I hear lots of stories of people losing a lot of money because they get overconfident with their investments, and they decide they want to start trading, and it doesn't turn out too well for them because they haven't done the research and they don't have the self-control to be profitable or successful traders, because it's an entire mind game. It's a complete mind game, trading. There's so many factors that affect the market, and it's very volatile, especially in the crypto space. Precious metals are starting to move pretty erratically. Erratically for precious metals. I mean, we've seen silver kind of taking a run. I think copper just made an all-time high. Gold is still very much near its all-time high, which it made, I believe, this year. So, in this environment, if you're looking at trading, do your own research, and that's capitalized, bold, and underlined. Do your own research, because again, there's so many things that could happen. On the investing side, you're looking for the long term. These are great asset classes to get into. The monetary industrial metal of silver and Bitcoin, in my humble opinion, I think are just really two great commodities that you can put money into, that most people aren't putting money into those things. Most people, they feel very comfortable buying and are investing in paper products and third party provided mediums of investments. Like I mentioned earlier, I'm not a big fan of that. But trading versus investing is for the long term, right? Investing for the long term, and trading is a different thing. And then there's also different things you can trade. So let's say you decide you want to be a trader. You're going to start trading Bonk, or Pepe, or Floki, or some meme coin, that's out there. In my humble opinion, those are not investments. Those are trades. I would not be allocating, let's say you work at a company, and instead of buying your silver or your Bitcoin, you start accumulating some meme coin. I don't see those as investments because they have no functionality. These things are just kind of like silly playing cards, and they have no purpose, they have no utility. It's literally an attention token. And as soon as the attention shifts to the next meme coin, which there are hundreds of thousands, if not millions of, that one's going to go to zero. These aren't long-term plays, I don't think. However, something like Bitcoin I do see as being an investment, because It has an ETF now. It's being picked up by institutions. It's recognized globally. And of course, silver, because silver is needed for everything. And it's becoming more and more scarce. And we understand that the price has been manipulated for so many years, and it's getting ready to move. The price is getting ready to move. So I think investments should be viewed as something more functional, something more proven, something that is desired and scarce. If you're a stock person, that's a great one. Real estate, great way to invest. It's a little bit different to get into that asset class, but that's another really good invest. Those are really good investments. If you buying Nvidia, you might think that's a good investment. The stock route, I think it's a little overbought and a little up there, but with this whole AI craze, who knows? The market's crazy. Those are what I see as investments. These kind of long-term, a little bit more predictable, very much in demand, highly functional, proven asset classes. Now you can say Bitcoin hasn't been around forever, it's not proven, but given where it has gone in the last 15 years, it has kind of become that investment vehicle. Trades are, you can trade anything I just mentioned too. You can, get in and out in the short term. Again, you're going to want to do your due diligence, maybe learn a little bit of technical analysis, which is a whole kind of art and science mixed together. That's where you look at charts and you somehow make a picture or a prediction, or you can see what can or may happen. It's a very, very interesting topic, and the people that are good at it are really good at it. It is a skill you have to learn. So with the trades, you want to trade a meme coin like Pepe Bonk, something like that on the crypto side, cool. You can trade silver as well. You can trade anything really, but again, it's a shorter term. It's a shorter term thing. It's not, some trades might last a year, some trades might last 6 months. I don't know if any trades that really last more than a year. They may just be short-term investments at that point. But again, on the investment side, you want to always be putting your money into something that's proven and reliable, that is moving up. Or if you're short selling, which is more of a trade, you're kind of betting for it to go down. So in the market, when you're trading, you can go long or you can go short. When you have a long position, it means you are betting that the price of a given asset or ticker is going to go up. When you're short selling, you're basically betting that it's going to go down. For me, a short is a trade, and I think long is more of the investment, especially as over time assets rise in value, and we have to have some very troubling events for them to go down forever. And I think anything that kind of reaches a certain point and goes to zero was never an investment anyways, but that's just me speculating. I think that's kind of the bare bones of it between investing and trading. Short-term trading, long-term investing. It's on a spectrum. It's on a scale. So it's really on to you to see what your risk tolerance is. And risk is another thing we're probably going to talk about in these videos as we come, because exposure and risk tolerance can play into how your investments turn out, along with how the market moves. So I think we're going to end it there for episode 7 of The Broke Investor. Thank you so much for joining me. Please like and subscribe the video. I think I said that already, but let me know what you think. Please comment. Please let me know if there's anything you want me to talk about. Again, this channel is kind of geared towards, the individual that has no idea about any of this stuff, and they just feel like something is wrong with the world, and that the dollar isn't going as far as it should. The euro, their own money isn't going as far as they should. So leave a comment, give a like, hit the bell notification, and we'll see you for episode 8. And again, I'm working on getting a new camera.